Most people think the rich stay rich because they're lucky. Or because they always make the right financial moves. But the truth is much simpler, and a lot more surprising. Rich people bounce back from setbacks faster than anyone else. Not because they avoid problems, but because they've learned how to respond to them better. And before we go any further, here's a quick reminder. I'm not a financial expert or a financial advisor. Everything I share here comes from personal learning, real-life experience, and a lot of reading and research about how money really works in the long run. So today, let's break down the habits, mindsets, and strategies that help wealthy people recover, rebuild, and rise again, even when life hits hard. Section 1. They stay calm when everyone else panics. Have you ever felt that punch-in-the-gut moment? You know exactly which one I'm talking about. You suddenly realize you made a serious mistake. Maybe a tiny typo ruined a financial projection. Or you forgot to book the venue for an important meeting, and the meeting is tomorrow. We've all been there. The details change, but that wave of panic and dread? That part is universal. Research shows, turning panic into power. Here's something fascinating from Harvard Business School. Most people try to stay calm in the wrong way. People who perform the best under pressure aren't the ones forcing themselves to relax. They're the ones who view a crisis as a challenge, something they're excited to overcome. The secret is mindset. High performers know how to channel their emotions into the exact behavior they need. They turn anxiety into energy, focus, and clear decision-making. The leader's mindset, proactive, not reactive. True leaders never stop leading. Reacting well makes you good. Preventing problems before they happen is what makes you great. When things are calm, most people take that as a signal to relax. But high-level leaders use quiet periods as preparation time. They think years ahead, anticipating what could go wrong and protecting the people who rely on them. Remember, fortune favors the prepared. A simple tool for instant perspective. When panic hits, ask yourself 2 quick questions. 1. What is the absolute worst-case scenario here? 2. Will this matter 5 years from now? Most of the time, these questions stop catastrophic thinking immediately. You realize you're panicking more from fear of embarrassment than from the actual problem. Once you remove that fear, you can rebuild confidence, take control, and fix the situation. Crisis moments, the great divider. When a real crisis hits, a recession, a global shock, a personal loss, most people panic. Fear takes over. Decision-making collapses. Energy disappears. But a rare group, wealth builders, iconic leaders, billionaire thinkers, remain unusually calm. They don't just survive chaos. They often come out stronger, wealthier, and more influential. Their secret? A crisis-proof mindset. It's not luck. Not privilege alone. It's psychology, discipline, and daily mental training that anyone can learn. The investor's advantage, discipline over IQ. The world's best investors know something simple. Psychology and discipline matter just as much as financial analysis. They don't react emotionally to market swings. They think deeply, anticipate trends, and avoid common traps that cause others to fail. Think of it as compounding interest, but applied to decision-making. Small, consistent improvements lead to exponential results over time. Great investors aren't defined by one brilliant trade. They're built through years of learning, refining their process, and making disciplined choices. The constant ups and downs of the market don't shake them. Instead of reacting emotionally, they step back, stay calm, and choose rationally. Leadership under fire, calm is contagious. If you run a business or lead a team, pressure is guaranteed. Difficult decisions, unexpected challenges, high-stress moments, they're all part of the journey. Leaders who remain composed make better choices. They resist impulsive reactions. They trust long-term strategy over quick wins. And they know when to pause, breathe, and reassess. The long game, ethics and self-awareness. Here's a powerful insight. Many of the most successful investors are deeply ethical and self-aware. There's a stereotype that finance rewards ruthless behavior. But the people who last decades aren't the ones chasing short-term wins at any cost. They're the ones who play the long game, build trust, and operate with integrity. It's the same in leadership. People follow leaders they trust. Customers stay with companies that stand for something. Long-term success isn't just about winning, it's about winning the right way. Millionaire habits, a system for any storm. When crisis hits, most people freeze. Some panic. Others simply wait for better days. Self-made millionaires operate differently. They rely on habits that keep them stable, in any storm. They're not necessarily smarter or more talented. They just think systematically and live with discipline. Their habits form a system that builds both wealth and resilience. Here are 5 fundamental habits. 1. Money loves order. Financial discipline is non-negotiable. Millionaires don't depend on luck. They control spending, manage cash flow, and always pay their future selves first, saving and investing consistently, even in tough times. Over the long term, this compounds massively. 2. Knowledge is permanent capital. While most people complain about change, successful people learn from it. Knowledge never loses value. Seeing a crisis as a learning opportunity is a powerful mindset shift. 3. They never operate alone. Millionaires intentionally build networks. They surround themselves with people who strengthen their ideas, offer wisdom, and open new doors. This support system keeps them, and their ventures, strong. 4. Emotions are managed, not obeyed. In a crisis, fear ruins decision-making. Millionaires train themselves to stay calm. They don't let emotions derail strategy. 5. The compound effect of routine. Wealth isn't built overnight. It's built through discipline, routine, and relentless consistency. Millionaires stand out not because of their starting point, but because of their daily actions. These 5 habits create a system for strategic thinking, financial discipline, continuous learning, strong networks, and emotional control. This is the foundation of long-lasting success. Millionaire habits aren't secrets, they're practical steps anyone can follow. Start applying them, and watch your mindset, and your results, begin to transform. Section 2, They protect their capital first. Have you ever wondered what the rich actually do differently with their money? It's not about how much they earn, it's about how well they protect what they already have. While most people think first about spending, or how to multiply their income, the wealthy elite follow one golden rule. Protect the capital first. Grow it second. And their number one tool for that protection? Diversification. But not the oversimplified version you see online, just by different stocks. For the wealthy, diversification is a strategic art, a fortress they build around their money. Instead of putting all their eggs in one basket, they use a wide range of financial instruments. Yes, a portion goes into traditional assets like stocks and bonds. But the real magic lies in the extra layers of protection. And to manage all of it, they rely on essential allies. Financial advisors and wealth managers who design portfolios tailored to their goals. Let's break down 7 core strategies the rich use to diversify and protect their capital. 1. Global diversification, no borders. The wealthy think beyond their home country. They spread investments across multiple regions, currencies, and economic environments. Why? To reduce the risk of a local crisis. And to capture opportunities in both developed and emerging markets. It's a strategy designed to be in the right place at the right time, always. 2. The power of the tangible, real estate. Real estate is still a cornerstone of long-term wealth. And we're not just talking about owning a home. A wealthy investor's portfolio may include commercial buildings, apartment complexes, hotels, agricultural land. These assets appreciate over time, generate rental income, and help protect against inflation. It's wealth you can literally see and touch, and pass down through generations. 3. Privacy and exclusivity, offshore accounts and alternative assets. For extra security and tax efficiency, many wealthy individuals keep part of their capital in jurisdictions like Switzerland or Singapore. They also invest in alternative assets such as fine art, rare wines, precious metals. These assets not only preserve value, they can appreciate significantly, combining financial gain with cultural and social capital. 4. The building blocks of the world, commodities. Commodities are the raw materials that keep the world running. This includes hard commodities like gold, oil, silver. Soft commodities like coffee, wheat, livestock. Investing in them offers protection and exposure to global demand. Because managing physical storage is complex, many wealthy investors trade futures, a financial way to own and profit from these assets. 5. The classic that works, stocks and funds. Yes, the rich invest in stocks too, just differently. Some focus on dividend-paying companies to generate passive income. Others follow the Warren Buffett philosophy. Buy great companies and hold them for decades. Many also use index funds to get broad, low-cost exposure to the market. It's a balanced, long-term approach instead of chasing quick wins. 6. Stability and predictability, bonds and fixed income. This is the anchor of their portfolio. Government, municipal, and corporate bonds provide predictable interest payments and help stabilize volatility from stocks. In the U.S., municipal bonds are especially popular among the wealthy because of their tax advantages, a smart way to earn income while preserving capital. 7. The world of alternatives, from venture capital to collectibles. This category includes everything outside the traditional market. It could be venture capital, angel investing in startups, classic cars, rare watches, limited edition collectibles. These investments require specialized knowledge. But they can be incredibly lucrative and enjoyable. But how do they manage all this alone? Simple answer, they don't. Here's something people often underestimate. As wealth grows, complexity grows even faster. Business owners, executives, or wealthy retirees rarely have the time, or the expertise, to manage multiple asset classes, international tax planning, trusts, insurance, and long-term strategy on their own. That's where the financial advisor or wealth manager comes in, acting as the architect and general of the entire financial empire. They bring structure to what could easily become chaos. Coordinate all moving parts, investments, cash flow, insurance. Adjust strategies as laws and markets change. Prevent costly mistakes even the smartest amateur could make. For a millionaire, a financial advisor isn't an expense, it's a force multiplier. Outsourcing this complexity frees time, reduces stress, and leads to better long-term results. Allowing them to focus on what they do best. Building wealth, or simply enjoying life. The lesson for us. Sustainable wealth isn't built through luck or a single risky bet. It begins with protecting your capital first, through smart, diversified strategies. And it grows stronger when you understand that asking for professional help isn't weakness. It's one of the smartest financial strategies of all. Start thinking like the guardian of your own wealth. Protect your capital first. Growth will follow naturally, and safely. Section 3, they analyze before they act. You make thousands of choices every day. Most don't matter. But some, the few, change everything. The danger isn't making the wrong choice. It's getting paralyzed by fear, stuck in analysis, and never acting. Here's the difference: while most people wait for a certainty that never comes, high performers know action beats analysis. They cut through the noise, decide quickly, and move forward with confident momentum. Your next level of success lives on the other side of the hard decisions you keep putting off. Let's see how top performers think and act differently. They don't have a crystal ball, they have a radar. The biggest moments in life come without guarantees. Yet billionaires and ultra-successful entrepreneurs develop an internal radar. They gather enough information to be dangerous, then they jump. They feel when the moment is right. Try this now, ask yourself, what would I do if I weren't afraid? The first answer that pops up is often the right one. Your instinct has processed more data than your conscious mind can ever hold. Write that idea down before fear invents problems that don't exist. Principles over emotions. Top performers follow principles, not feelings. They prefer speed over perfection. They burn the boats to force progress. And they learn from other people's expensive mistakes. A different thought structure. At the core, the major gap is how they think. People who achieve extraordinary results do things differently because they think differently. Here are the mindsets that separate a billionaire from the crowd. 1. Ultra-long-term perspective. While most of us plan for the week or the weekend, billionaires make decisions with 10-year horizons, or longer. That doesn't mean they ignore emergencies, they have insurance. Their primary focus is on future opportunities they know will appear, not hypothetical disasters. Think about this, we can live in the present and plant seeds for a powerful future. People overestimate what they can do in 1 year and drastically underestimate what's possible in 10. 2. They value time more than money. To a billionaire, money is replaceable, time is not. They outsource anything that returns their time, drivers, assistants, services. Imagine you earn $100 an hour. If you spend 3 hours on a task to save $100, you've lost $200 in potential. Which tasks are draining your time and earning potential? Hiring help might be the smartest investment you can make. 3. Goals are monumental. Billionaires don't aim for a 6-figure salary or a luxury car. Their goals are seismic: revolutionize digital health or own 1 million rental units. You don't hit gigantic outcomes with tiny goals. Challenge: examine your own objectives. Are they limited by what you think is possible, or by what you actually want? Loosen those mental constraints. Even if you miss the star, you'll soar higher than you imagined. 4. Focus on earning more, not just saving more. Traditional advice says cut expenses. That has limits. You can't save your way to massive wealth if you never increase your income. Billionaire thinking prioritizes creating more value and expanding income. Saving builds the base, burning more multiplies opportunity. It's a virtuous cycle: deliver greater value to more people, and the rewards follow. 5. They actually love the work, but the right work. Here's the secret: billionaires avoid busy work. They structure life so the majority of their time is spent on creative efforts in areas that fascinate them. Everything else is delegated or removed. The result isn't endless grind, it's consistent progress and deeply rewarding impact. They obsess over improvement and evolution, not just money accumulation. This mindset is for anyone. You don't need $1 billion to think like one. But starting to think as if you could is the first step to unlocking potential you didn't know you had. Ask yourself now: how does my thinking compare to this? Which of these ideas can I apply today? Act from analysis, not paralysis. Think long-term. Value your time. Set big goals. Focus on creating value. If this part helped you think more clearly about long-term risk management, make sure to hit the like button and subscribe. Section 4, they see crisis as opportunity, improved and more engaging. When a crisis hits, you're faced with a choice. You can freeze, hoping things eventually go back to normal. But without taking action, the outcome is rarely in your favor. Here's the truth: you're probably not going back to the old normal. And ironically, that can be a good thing. You can turn a crisis around, but it requires a different mindset, a realistic view of what's happening right now, and a clear plan for where you want to go next. As William James, the father of American psychology, wrote, "The greatest weapon against stress is our ability to choose one thought over another." Market psychology, why most people fail. Traditional financial theory assumes everyone behaves rationally. But real life, especially during chaos, looks nothing like that. Behavioral finance shows that in moments of panic, emotions take control. Humans aren't just risk-averse, we're strongly loss-averse. Losing $100 hurts far more than gaining $100 feels good. And this emotional imbalance pushes most people into two classic mistakes. Selling winning investments too early. Holding on to losing ones for too long, hoping they'll magically recover. Where others lose control, opportunity appears. This is where disciplined people see what the crowd can't. While most investors panic and sell everything as prices collapse, a small group looks at the same situation, and sees a clearance sale. Fear often pushes the price of high-quality assets far below their real value. Anyone who remains calm, patient, and has available capital can buy these assets, on sale, and potentially enjoy significant returns when the market eventually stabilizes and prices return to fundamentals. Historically, every major crisis follows the same pattern. Panic selling, undervaluation, recovery, renewed optimism. The market reacts to fundamentals, not to temporary fear. Practical strategies during a crisis. So how can someone position themselves? There are several approaches. 1. Buying undervalued assets. This happened during the 2008 Great Recession. The housing bubble burst, properties went to auction, and investors with capital bought valuable real estate at historically low prices, earning massive returns during the recovery. The same applies to strong companies whose stocks drop simply because the entire market is panicking. 2. Betting on the downtrend, for advanced traders only. You can profit directly from falling markets through strategies like short selling or buying put options. These are complex, high-risk tactics that require deep knowledge, timing is critical, and losses can be unlimited. 3. A defensive approach, for most people. For the majority, the smartest move is protection. A truly diversified portfolio, with assets that don't all move together, helps cushion the impact when volatility hits. The mindset that turns crisis into opportunity. But applying these strategies requires more than technical knowledge. It takes a shift in mindset, the same shift seen in great leaders and successful entrepreneurs who thrive during uncertainty. 1. Learn to unlearn. Forget the idea that what worked before will always work. Crisis demands new responses. Stay adaptable, stay curious, and reset your strategy based on the reality in front of you. 2. The power of vision, and a real plan. Thinking about the future isn't just dreaming, it's planning. You may not know the full extent of a crisis, but you can build scenarios. What do you do before, during, and after? Having an actionable plan moves you from reactive to proactive. 3. Innovate to grow. Crisis accelerates change, which opens the door to innovation. Look at education during the pandemic, digital learning exploded. Where can you innovate now so that you come out stronger? 4. Keep your North Star in sight. Discouragement comes easily during tough times. That's why you need absolute clarity about your long-term goal, your personal North Star. It's what keeps you aligned, even when everything else feels unstable. 5. Expand your comfort zone. Crises don't ask permission, they push us out of comfort whether we like it or not. Instead of resisting, use that push to explore new ways of doing things. Often, the best opportunities sit just outside what feels familiar. Crisis will always be part of the economic cycle, the last century alone saw around 20 major ones. The difference between those who collapse and those who come out stronger is largely psychological. While most people react emotionally, selling at the bottom out of fear, a small group uses discipline, patience, and strategic thinking to act differently. They buy when others are terrified. They wait when others panic. They innovate when others freeze. For them, crisis isn't the end, it's the turning point. How you respond in these moments shapes not only your financial future but your ability to lead yourself, and sometimes others, through uncertainty. The opportunity is always there. The real question is, will you be ready to see it? And just a quick reminder before we continue, I'm not a financial expert or a financial advisor. Everything I share here comes from personal experience, a lot of reading, and constant research. I'm simply learning and sharing along the way. If you're getting value from this journey, don't forget to like the video and subscribe so we can keep growing together. Section 5, They Never Stop Learning, Improved and More Engaging. Have you ever noticed a pattern? Some people leave school with the same basic education as everyone else, yet years later, they've built impressive wealth, while others haven't. Most people look at that and think, that's just luck. But what if it's not luck? What if there's a code of conduct, a set of habits, that school never taught us? The truth is, wealthy people do certain things differently. And the most important one is this: they treat life as an endless classroom. Sustainable wealth isn't an event. It's the result of a mindset built on continuous growth. Let's break down the pillars of that mindset. Pillar 1, the circle of influence. Wealthy people know you don't grow alone. They intentionally surround themselves with ambitious, successful, growth-minded individuals. This circle accelerates learning through shared experiences and ideas. In contrast, a scarcity mindset often keeps people stuck in groups that reinforce limiting beliefs about money and possibility. Pillar 2, the non-negotiable foundation, health. They understand that wealth is a long-term endurance game, mentally and physically. A clear mind and a healthy body are essential for making complex decisions, staying focused through long hours, and managing the unavoidable stress of pursuing success. Investing in health isn't a luxury. It's maintenance of your most important asset, yourself. Pillar 3, the courage to act. Everyone feels fear. The difference lies in how they respond to it. Wealthy people don't let fear paralyze them. They feel it, evaluate the risk, and act anyway. For them, action, even imperfect action, is the real teacher. Every obstacle becomes a lesson that moves them closer to success. Pillar 4, the problem solver mindset. While many see problems as walls that are bigger than them, wealthy individuals do the opposite. They see themselves as bigger than the problem. They approach challenges with a confident belief that a solution can be found, or created. This proactive attitude turns crises into puzzles instead of roadblocks. Pillar 5, the hunger for knowledge, lifelong learning. For them, a diploma isn't the finish line, it's the starting point. They invest time and money in personal development. Books, mentors, courses, new skills. People with a fixed mindset believe they already know enough. Successful people know the world changes, and if you stop learning, you fall behind. Pillar 6, belief in their own merit. This is a powerful psychological foundation. Wealthy individuals genuinely believe they deserve the success they work for. This contrasts sharply with the self-sabotage and low self-esteem that make many people doubt their ability to achieve big goals. Pillar 7, focus on net worth, and multiple income streams. School teaches us to chase a job, one source of income. Wealthy people focus on building net worth, not just earning a salary. How? By saving with intention, investing consistently, and, most importantly, creating multiple streams of income. They don't depend on a single paycheck. Investments, businesses, and passive income build resilience and accelerate wealth exponentially. Pillar 8, money as an employee. Here's one of the biggest mental shifts. The rich don't just work for money, they make money work for them. They invest capital to generate more capital. They build systems and acquire assets that produce income, freeing up their own time. Pillar 9, long-term discipline. They consistently choose long-term results over instant gratification. While many people only think about the next payday, the wealthy think in years. They invest in things that take time to grow: stocks, businesses, real estate. This discipline teaches patience, resilience, and the ability to navigate setbacks without losing focus. Sustainable financial success isn't about finding one secret. It's about adopting a system, a set of principles that guide your decisions. Your journey starts with one question. Which of these pillars represents your biggest opportunity to grow? Choose one. Just one. And start integrating it into your life this week. The transformation of your financial future isn't a single moment. It's a process. And every process begins with one deliberate step. Section 6. They build systems, not hope, improved and more engaging. Most people are driven by a powerful force: hope. We hope next year's salary will be better. We hope our business will finally take off. We hope things will somehow work themselves out. But here's the truth wealthy people understand. Hope is not a strategy. It feels comforting for a moment, but in the long run, it keeps you exactly where you are. The fundamental difference? While most people wait for a better future, wealthy people build the future they want. They don't rely on luck, they create systems that make success far more predictable. Let's break down the pillars behind these systems that turn desire into reality. Pillar 1, Discipline, the unshakable foundation. Wealth isn't usually the child of luck, it's the child of relentless discipline. This shows up in non-negotiable habits. Budgeting every dollar, tracking expenses, saving before spending, and following a financial plan regardless of mood or circumstance. Discipline is the silent engine that makes every other dream possible. Without it, even the best opportunities slip through your fingers. Pillar 2, Invest in tomorrow before spending on today. Financial independence begins with one decision. Your future comes first. Instead of directing all income toward immediate comfort, wealthy people consistently channel a portion into assets that generate more wealth over time. Their golden rule is simple. Let your investments pay for your luxuries, not your paycheck. This small shift in order turns income into long-term net worth. Pillar 3, Choose assets that solve real problems. Where you put your money matters. Sustainable wealth comes from investing in sectors that create real value and solve real needs: energy, technology, infrastructure, innovation. The focus is on assets that generate cash flow and have long-term growth potential, not on speculative bets. It's about owning systems that produce results. Pillar 4, Profit with Purpose, the legacy multiplier. One of the most powerful concepts is combining profit with purpose. When you build or invest in something that delivers financial returns and positive social impact, you create a deeper, more resilient form of success. Purpose attracts exceptional talent, builds loyalty, and gives your wealth a meaning far beyond your bank balance. Pillar 5, Multiply your impact by empowering others. True wealth isn't measured only by what you accumulate. It's also measured by what you enable others to achieve. Through mentorship, investing in new talent, or creating opportunities, wealthy individuals build stronger networks and more prosperous communities. And in the process, they reinforce the foundation of their own legacy. The mindset behind the system. All of this is supported by a specific mindset. Wealthy people believe wealth is accessible to anyone who works with intelligence, focus, and strategic decision-making. They don't see it as a privilege reserved for the lucky few. More importantly, they see opportunities where others only see problems. While most people freeze in front of a challenge, they ask, "How can I solve this in a way that creates value?" That perspective turns obstacles into stepping stones. And difficulties into doorways to success. Conclusion, from spectator to architect. The journey to resilient wealth isn't about waiting for a miracle. It's about becoming the architect of your own financial future. Discipline lays the foundation. Early investment provides the resources. Clear decisions direct those resources wisely. Value and purpose keep the system sustainable. And empowering others expands your legacy. Lasting wealth isn't random. It's a system, one that you design, implement, and continually refine. Stop just hoping. Start building. This concludes our video, Why the Rich Always Bounce Back. And if this video brought you value, make sure to subscribe for more content that turns knowledge into practical results. Now it's your turn. What's the first system you're going to start building this week? Share it in the comments below. So here's the real secret behind why the rich always bounce back. It's not luck. It's not perfect timing. And it's definitely not magic. It's resilience, built on habits. It's discipline, built over years. It's preparation, built long before problems appear. And the best part? You can build this resilience too, no matter your income or background. Because resilience isn't money. It's mindset, strategy, and lifestyle. Stay smart, stay curious. And I'll see you in the next video.